Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of Brent crude oil and spot gold.
ICE Brent crude oil futures. An indecisive spinning top on Friday will also be viewed as a possible shooting star pattern, typically a bearish pattern. Now, prices rose up and pierced not just the October 2018 high at 86.67, but also the upper trend line of the very recent small expanding wedge pattern. That's currently 86.68 to 84.20. However, the next overhead resistance, the purple highlighted neckline, currently at 87.5, proved too much for the market, and prices fell away, ending the day back within the cone of the wedge pattern. Below, we have the 50% Fibonacci line of the September to December 2022 move at 84.99. And the first of the moving averages, the medium moving average, currently 84.69. Before we meet the lower expanding wedge pattern and its companions, the parallel and declining short medium moving average, currently 83.97, and the slightly lower and declining long moving average, currently at 83.54. In the bigger picture, Friday's action was a valiant, if ultimately failed, attempt to fill in the changeover gap from late April, originally between 85.89 to 87.46. The October 2018 high 86.67 was the main obstacle overhead, and it was not overcome despite the sharp move higher. Doing this move up and failing on the last day of June meant that June became a lesser outside month rather than a key reversal month. Nevertheless, it was yet another close over the dark blue upper trend line, currently at 80 even, of the April to June bearish expanding wedge pattern. Now, before I deal with this pattern, back in early May, the market broke down below the bright red highlighted December 2023 to late April 2024 lower bull channel line, and this gave some potentials below for this pattern. The primary target in the 78 even zone was reached, but the secondary hard to reach target X2 down in the 72.30 zone has not been reached, and I will retire this potential target after this commentary. Now, we also had a mid-March, end of April head and shoulders top with the purple neckline that is just above the market at 87.5. This, along with the October 2018 high at 86.67 and the 50% Fibonacci line November 2020 to March 2020 move at 87.41, these three altogether provided the next set of resistances on any attempts to fill in the overhead gap. However, this is not the end of the matter. You see, this break higher from the dark blue bearish expanding wedge pattern still gives us potentials topside. Thus, a primary target X would be in the 89.45 area with a harder to reach secondary target X1 up in the 92.05 area. Again, that is not all. You see, I've been studying this action since April quite closely, and what I have or had initially thought might be a bearish halfway hesitation has morphed and developed into a late April to date diving board pattern, which actually goes a long way to explain the cause of the recent bullishness. Now, so far today, a changeover gapping open lower below the 50% Fibonacci line of the September-December 2023 move at 84.99, but held up by the nearby slowly rising medium moving average, currently 84.69. Such that prices have risen up to try and fill in the overhead gap that's up to 86.24 created over this weekend. Spot gold. An indecisive doji cross on Friday after the previous session's reactionary bullish white soldier. Below is the important 50% projected Fibonacci line at 23.01, and above, well, that was halted by the green highlighted short medium moving average, currently 23.39. That is just turning over into heading lower. It was nevertheless yet another consecutive close below the bright red lower time, currently 23.51, of the breached early October 2023 to mid-February 2024 bullish Andrews pitchfork. Now, further down, we have the dark blue neckline currently at 22.93 of the possible April to date head and shoulders top. I am not wholly sold on this head and shoulders top idea, though I do see the merits. To me, the action still looks more like a possible double top with an extension, but having the same neckline for both highlighted as well, it does help in matters overall. So far today, a small dip lower, but not too far away from Friday's close, and we've recovered back up again.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.